In this video, we'll examine the question how various family accounting procedures such as posting charges, credits, payments, and closing deposit reports affect family accounting reports. We're going to work with one report today called the Receivable Journal Summary report, and let's begin. We'll begin today with all of our accounts at a zero balance, so there is no accounts receivable balance owing. When I run this report, it's under the Standard Reports, Family Accounting, and then Receivable Journal Summary report. I want to run the same date range for all of the reports today in the examples, so I'm going to pick the second quarter, and I'm going to save settings so I don't have to set that every time I come in. It'll automatically retain that date range for me, and I'll run report. So with no accounts receivable balance owing, we have no accounts receivable showing here under assets. Only our undeposited payments, which is at zero, and our primary checking account, which is all of the payments that have been posted have been deposited into that primary checking account. So in this case, those are all debits, and all of our charges and activity fees and miscellaneous charges along with credits are totaled here, and they equal each other. So these are all the charges, these are all payments received. These two numbers will balance each other on this report. It's a drill down report, so if I want to see the detail of any of these items, for example the primary checking, I can double click it and I'll see all of the deposits that make up that number. And same thing for tuition. Here's $15,723. If I double click tuition, I'll see all of the charges here individually added up that make up that number, including discounts. So you'll notice that discounts reduce the revenue, all of the other charges increase revenue, for a net number of $15,723.50. Okay, so you can double click any of those lines to get the detail. Let's go post some charges and then I'll rerun the report. I'll pause the video while I post some charges. Okay, so now I have posted some charges. You'll notice each of our accounts has balances, and our total outstanding for private balances is $1,783. Let's rerun the report and see what the effect was. Again for the second quarter. And now we have an accounts receivable amount of $1,783. That's what we just posted in charges. So you'll notice our total went up for assets and our total for charges went up. When we posted those tuition charges, this number was increased. Let's now post some payments so we can see what happens there. We'll notice that the undeposited payments account will go up and the accounts receivable account will go down when I post payments, because we'll be reducing the amount that people owe us. I'll pause the video while I do that. I have posted payments now on several accounts. We've reduced our total amount owing on all accounts down to $668.25. We'll rerun the report and see the effect of that. You'll notice that the undeposited payments now went up by the amount of the payments that I just posted, and the accounts receivable was reduced by that same amount. Our totals at the bottom have not changed because we didn't post any more charges, and basically we're moving money from the accounts receivable of people owing it to us, and now it's sitting in the undeposited payments waiting to go into a bank. And that'll be my next step. I'm going to close a deposit report with all of these payments on it, so you'll see the primary checking account increase by this amount and undeposited payments will go back to zero. I'll pause the video while I do that. Okay, so now I have deposited all of those payments into my primary checking account. Let's rerun the report, and you'll notice undeposited payments went to zero. The primary checking account increased to show those deposits, and our accounts receivable remains the same. So that is how charges, credits, payments, and closing deposit reports affect various accounting reports in ProCare. Again, we're working with the Receivable Journal Summary report in this example.